Hi there, Serial Trader here. I'll check in with the major US indices and starting off with the SPX 1 hour chart, looking where we're at here as far as the wave count goes. So very confidently we have 5 waves down in place off of our B or 2 high up here. And I think we've completed that wave C or 3. And again, I'll keep calling it C or 3 until we actually get to the point where we invalidate the 3 scenario, and that point will be overlapping here with this level at 28.55.84. So if we get above that level, then we can now call this an ABC down and start treating this move to the upside as something more than just a potential 4th wave. But for now, that's unknown. We do have a rally though on our hands, and short term it's looking like it needs to correct here. But I don't think this will be the extent of the move up before we potentially make new lows, if that even takes place. So, I mean, if we go in on the 15-minute price chart working off the bottom, now that we've had more pattern development, this looks like a very clear impulse wave. It does not look corrective as of yet. And let's just grab the absolute low here and put some labels on. So that's our 1, that's our 2. I think I can actually make that our 3, so we have a nice extended 3rd wave, nice little ABC down for 4, and now I think we're probably working the 5th wave of possibly a larger 1, and let me just get this out there, possibly a larger 1, or a larger A. Okay, so this could still just be an A, B, C up in progress, as long as we don't overlap with that 28.55. Let me just get rid of this line here. So yeah, I think we are approaching 5 up for either a 1 or A. And that will require some sort of corrective move down in either B or 2. And no evidence yet that we've actually put in our little wave 5 top here. But it seems like fairly soon this should run out of some steam and we should have a little correction down, which would be a fresh buying opportunity for anyone that's not currently already in a long position of any kind. And just doing a fib pull off the top currently, the 50% retrace would be around 2400, a little more. The 382 be mid 2400s. But again, no need to do a fib pull until it looks like we have some sort of clear top and that we're now correcting downwards. Just not quite there yet. So I will actually do a little peek there at the ES futures. So I do like that we have this impulse wave, at least on a short-term basis, likely nearing completion there on the SPX. But let's just do a little comparison for ES. And let me just jump over to the ES chart. And this is the 1 hour chart of ES. So off its bottom, looks like you got a 1, 2, 3, 4, and again, looks like we're working a 5th wave to finish off this initial impulse wave up off the bottom. So ES, there's certainly no conflict here. You have 5 non-overlapping waves in progress. You can see even here on these spikes, you didn't have any 1-4 overlap even overnight, so that's good to see. Good clarity, good consistency between ES and SPX. It makes it more ambiguous if one pattern is telling you something different than the other, but they're both in alignment. They both show a 5-wave sequence nearing completion, and they both suggest that when that completion takes place, you will get some sort of corrective decline to likely set up a fresh long position. But again, we have to start correcting down before we can really start measuring for that. So I like to see that ES and SPX in alignment. Nothing in conflict there. Go back to that 15-minute price chart. And it'll be interesting tomorrow, being that it's a Friday. Do we, surge into the close, or do we sell off into the close? Are people, basically the psychology of it's going to be, are they scared of what's going to happen over the weekend and therefore bearish for Monday? Or are they excited about, the uptrend that's in progress and they don't want to miss out? So they want to, get even more long going into Monday, hoping for a gap up or something. That's kind of the psychology we'll be dealing with tomorrow, at least into the close. So that'll be interesting how it all plays out. But yeah, either way, I do want to see a nice little pullback here fairly soon. If not tomorrow, then sometime early next week, I would imagine it would start to set up a fresh long position to play either a C or a 3 after we correct this 1 or A into a B or 2. So that's really my playbook right now. Now on the Thinkorswim candlestick chart, SPX here. So obviously we're closing well above the T line, 3 T lines crossed above. And you can see since we started tanking here, we haven't done that this whole time. So that is a, hang on there. Yeah, so that is a notable change in trend. We've been below this 8-period exponential moving average since we started declining. So regaining that in such a strong fashion, that's certainly notable. And you can see this falling 20-day simple moving average is coming into play pretty soon here, currently around 2677. So in the high 2600s, around 2700, we might find some resistance here against that moving average, and that would also coincide well with a short-term peak on that 5-wave pattern off the bottom. Should lead to a little bit of a corrective decline, ideally, to create a new buying setup. But no need to call a top until it kind of starts coming down and reveals itself as one. Keep in mind, something can always continue extending, just as we saw extension towards the downside, even though we could count a fairly mature 5 waves down at different points in this decline. That doesn't mean anything until you actually get that big reversal to confirm that, okay, you got your 5 waves complete. So even though we can count on a short-term time frame, a fairly mature looking 5 waves up, it could just subdivide higher. You could have more extension in the 5th wave, or it could just be a huge extended 3rd wave, and we haven't even gotten the 4th wave yet that'll lead to the 5th wave. So I certainly wouldn't be looking, personally, I wouldn't be looking to short this for that pullback. I'd be waiting, if I'm not already in, waiting for the pullback to form nicely, and then trying to get long on that. And if you're already long, I would, start trailing your stop. So if you go on let's just throw up a 30-minute price chart. So if you're already long, every time you have a pullback here, and then you make a new high, move your stop below that pullback, and then move your stop below that pullback, and then move your stop below this pullback, and eventually you'll stop making higher lows, and you'll at least start breaking this uptrend, and you'll get stopped out. But if it just keeps going higher highs and higher lows, just allow it to, and just keep trailing that stop up to the previous higher low until you finally get taken out. That's not a bad way of trying to follow this trend up. That's one of my techniques on the futures that I like to use. But again, if you're not already in, I'd be waiting for some sort of larger pullback to position for another move up. Okay, so that's SPX. Don't want to spend too much time on that, as I will be doing another update here for the weekend. Maybe not tomorrow, but certainly on the weekend at some point. Dow Jones Industrial Average, very much the same thing. We're getting close to that 20-day simple moving average, which could serve up some resistance and lead to a little pullback. Right now, that's currently around 22,877. And NASDAQ Composite, we're right about at that 20-day simple moving average, just slightly under right now. And that comes into play at 7,828, so just above 7,800. So basically everything's in the same position here as far as the 3 indices. There's no discrepancies as far as what I'm seeing or expecting to happen here in the short term. definitely looking for a short-term peak, a nice correction to a higher low compared to this low that we made there on Monday, and that should set up a nice long. VIX. So VIX is still kind of hanging in there, but as long as VIX isn't surging or increasing, we can certainly continue the uptrend on the indices. And you actually have a little bit of a bearish engulfing candlestick here on VIX today. Not that I have a huge belief in candlestick signals on the VIX itself, but just thought I'd point it out. Bearish engulfing candlestick, closed below the daily T line, still down, although modestly for the day on VIX. So as long as VIX isn't shooting up the new highs, it can just kind of hang out at fairly high levels, but we can continue higher on the indices. And obviously, if VIX really starts tanking, that's also bullish for further increases on the market. Okay, and I will do the VVIX tool, and still on the buy signal, certainly not under any kind of threat. The blue moving average, which has been pointed down this whole time on SPX, is now starting to curl up, and we're currently still well above that blue moving average, which is right now just above 2,400. So we're about 230 points or so above the blue moving average. But on a corrective pullback after we peak out here, it wouldn't be unusual to see us pull back and test that blue moving average as support, as opposed to it serving as resistance this whole time. And VVIX still well below its red moving average, so we're still very much on a buy signal as far as this tool goes. All right, that's all I want to touch on for now. So bottom line, still potential some, I would say, modest upside before we have a little short-term peak. Then look for a decent pullback to a low that's above Monday's low. And once a nice pattern sets up, that should present a nice fresh long opportunity. Probably sometime next week. I don't think we'll see it all. Even if we start pulling back tomorrow, I don't think it'll consume enough time to be the entirety of the pullback. Yeah, so that's where I'm sitting with that. All right, see what happens tomorrow. Every day seems to be exciting right now, so looking forward to it. Serial Trader, signing off.